Hey, I'm going to talk to you guys today about a secret weapon that a lot of investors use that a lot of people are not aware of when it comes to building a rental portfolio and a real estate investment portfolio, and that is a DSCR loan. Now, DSCR loan stands for debt service coverage ratio. So most people, when they think about going and borrowing money for a piece of real estate, they think about going to a traditional bank, a traditional lender, and going through the traditional process, which there's completely nothing wrong with this. But local banks, regional banks, even some of your bigger banks, as you start to grow a rental portfolio, it becomes harder and harder to go borrow from the same bank because they have all kinds of different regulations that they have to follow. And then also they put you through basically a pretty thorough financial scope. And again, there's nothing wrong with this. As you start to become, an expert in real estate investing, having as many sources that you can borrow money from is the best thing to do. However, one of the things that we like to use is a DSCR loan. The reason we like to use a DSCR loan is because the DSCR loan, lenders out there that use it and lenders out there that use this product, they base it on the property, right? Now, you're gonna have to have some minimum credit requirements, at least a 620. The higher above 620 you're gonna be, the better rate you're gonna get. You're gonna have to have some liquidity requirements. So they're gonna do a liquidity check to see that you've got some money in the bank. And if you don't, then maybe you team up with somebody to kind of help you in the beginning to get you going. But basically what's gonna happen is they're gonna look at the property and does the property cash flow. So a simple rule is the 1% rule. Meaning if the property is a $200,000 purchase price and you can get $2,000 in rent, then in most cases that's gonna qualify. They're gonna look at a 1-to-1 or more than a 1-to-1 debt service ratio coverage. That's why it's called a DSCR loan. Meaning, does your rent cover the debt, the taxes, the insurance, right? And so in most cases, in most places in the United States, if you have a 1%, meaning $200,000 purchase price, $2,000 rent, you're gonna be over that 1-to-1 coverage every time. And not substantially over, but you should be enough over it to qualify. So with a traditional bank and with most banks, they're not just gonna look at that, they're gonna look at your tax returns, your work history, they're gonna put you through all kinds of things, which again, there's nothing wrong with that to have these relationships, but DSCR is not gonna put you through the same financial strain and financial scope. The other thing that's great about DSCR loans is a lot of times you have the availability to get a cheaper interest rate because it's a completely different market a lot of times where they go to get the money and where they lend, to lend to you as an investor, and they sell a lot of the notes. In most cases, they sell all the notes. So it's just a different market than say like a traditional bank that a lot of times they're getting their capital from different places. And a lot of times also with a DSCR, they are doing it on a 30-year AM, meaning they are going to stretch your payments over 30 year versus 20 and 25, which is going to give you better cash flow. Now, if you can buy a property and it cash flows on a 20-year AM and that makes sense, then obviously you're going to pay less in interest. But if you're first starting out and cash flow means more to you than paying debt off faster, DSCR is a great option because they're going to give you a 30-year AM. Now, you can get lower AM sometimes with DSCR, but a lot of DSCRs are 30-year amortization, which means they are going to spread the loan over a 30-year lifespan, which means your payment's going to be lower, which means ultimately your cash flow is going to be better. So that's another reason why a lot of people use DSCR loans. So if you're out there, you have to understand that there are a lot of lending institutions, traditional lending institutions, that do not do what's called a true DSCR. So if you're out there and you're paying attention to this, you can reach out and I can give you a list of the DSCR lenders that we use. We have one specifically that we use that we really, really like, that we can help you get plugged in with them and get some DSCR loans. But it is a great option for you to build a rental portfolio and have another option for financing that you don't have to go through traditional bank financing. And that's one of the reasons why we use it, and we think it is a great loan to use. So if you're out there and you're paying attention to this and you want to learn more about investing in real estate, please like, subscribe, follow me, check out my podcast, Wake Up to Wealth, where we talk all kinds of subjects when it comes to investing in real estate and investing in general. And if you want to get some deep institutional knowledge on this, maybe even coach with me, hop in one of my groups, reach out, let me see what I can do to help you on your real estate investing journey.